Welcome to the Allan Small Financial Show. As always, I want to thank all of you for taking the time out of your busy day and spending some time with us. We have a great show for you today. We have a great guest on our show this afternoon. I was able to catch up this past week with Vic Fedeli. Vic is the Minister of Economic Development, Job Creation and Trade for the province of Ontario. A lot of you are familiar with Vic. He's had many spots or many postings with the Ontario government over the years. He's quite famous for his yellow ties. You'll notice that in our interview, he wears his famous yellow tie, as he does quite often. He's going to talk to us about what's going on in our province. You know, I travel around the province quite a bit, mainly Southern Ontario, talking to businesses, talking to individual investors. And for the most part, people are somewhat negative on what's going on in our province, in our country. They're seeing that growth is slowing quite a bit. They are seeing the struggles in growing jobs. The younger generation, our children who are graduating from universities and colleges, they're struggling finding jobs out there. And there's just this overall negative attitude that I've encountered on my travels. Well, thought it'd be interesting to bring to you one of the more positive people around. Mr. Fedeli, he is an amazing person to talk to, so positive and positive about what is going on with our province. So we're going to give you that interview or show you that interview in just a few moments. But let's also put up what we're going to talk about outside of the interview for today. Top 3 things to consider over the next 5 to 10 business days. So after our interview with Minister Fedeli, we're going to talk about, as usual, our top 3 things that individual investors need to be focusing on before you make your investment decisions. Investing in artificial intelligence, an AI era. This is an interesting conversation I had with an investor a few years ago. Thought I'd bring you some of the highlights of my conversation back then, bring it forth or bring it ahead to where we are today and talk a bit about AI. And AI has been obviously the most important thing right now for the stock market. And we're going to touch on AI and how to invest in it in the current market environment. Corporate buyback surge. Yes, businesses, when they feel that their shares are I guess, low in value, that their shares are on sale for whatever reason, they tend to buy back their own shares. Businesses buying back their own shares, they feel as though that is the best use of their cash. And we see that quite often. And that usually lights a fire under the stock. Not always, but usually can. And individual investors figure that if businesses are buying back their own stock, that might mean something, and a lot of investors follow suit. U.S. hybrid car sales surge in the past 2 months as gas prices rise. Interesting to see that hybrid car sales are actually rising, not as many electric vehicles. So the purely electric vehicles versus the hybrid vehicles. And there are reasons for that. We're going to touch on that. And quick hits. Quick hits, part of our show where I talk about 3 things that I've seen in the news over the last couple of weeks, commenting on those. And I'm sure some of you will have seen these news articles as well. And last but not least, of course, your questions. If you have any questions regarding my interview with Minister Fedeli or anything on our show, please put it in the chat boxes. Someone will come by and pick up those questions. Happy to answer them at the end of our show today. If I don't get through to your question, then I hope to answer it during the next 2-week period or on our next show. So without further ado, let's move on to a fascinating interview with Minister Fedeli. I'd like to welcome the Honorable Vic Fedeli, a lifelong entrepreneur serving the Ontario government as Minister of Economic Development, Job Creation and Trade. His business experience led his firm Fedeli Corporation to be ranked in the top 50 best places to work in Canada in 1989. It also served him well when elected to 2 terms as mayor of North Bay. In 2011, Minister Fedeli was elected to the Ontario legislature and is now serving his 5th term as MPP for Nipissing. He is married to local humor writer Patty Fedeli and is often seen in one of his trademark yellow ties, as we see today. Welcome back to the show, Vic. Great to have you back.
Great to see you today. How are you?
I'm doing well. And I thought a great time to have the man himself to talk about the business and what kind of business is coming to our province. We hear a lot of good and mixed
Yeah.
news about business being or coming to Canada, coming to Ontario in particular. And I thought, who better to have on our show to tell us all the great things about what's happening in Ontario, like yourself. So I thought
Yeah.
we'd start off with a general question. Premier Ford appeared on our show at the beginning of the year, so not that long ago, and he talked to us about at that time about yeah, he said about $28 billion of new business coming to Ontario. I know since then we have you have upped that number to $35 billion of investment coming to our province last year. Obviously, a very nice number. So, thought I'd start off by asking you. First question would be, what are you seeing so far for 2026? The first quarter, I guess, or 4 months. And what are you seeing going forward? Are things looking even better, the same, or perhaps not as good? What are you seeing right now?
Well, thanks. First of all, thanks, Alan, for having me here today. It's great to see you again. The premier, he's a numbers guy, so he loves his numbers. And I would have to start by saying, first of all, last year alone, we saw 750 companies located in Ontario. They
Wow.
invested 35 billion and they hired 64,000 people. And so, as he would have said, that brings our total to about $222 billion since we got elected in 2018. That's a tremendous amount of investment in a lot of sectors, advanced manufacturing, life sciences, and tech. So in 2026, we're seeing a pivot because the feds have stepped up and are proposing 2% to invest their 2% of GDP to NATO. That's a big number. Then they're pledging to go to 5%. So these are really big numbers. Um, and you look around the world, the EU is pledging $1.3 trillion in rearmament. Um, Germany's releasing their debt brake and going to 600 billion euros. This is a couple of $1 trillion that's going to be spent. So we've pivoted, Alan, to defense, important, because we've got the advanced manufacturing, we've got the tech. When you look at a lot of defense, it's computers on something, computers on a drone or computers, much like we said, electric vehicles are computers on wheels. It's much like that. So we're so heavy in AI and heavy in defense.
I mean, defense. It makes sense, obviously, with the numbers you're talking about.
Yeah.
Obviously, I imagine that bringing new business to Ontario might be a little bit more difficult these times. Obviously, we're in heavy trade talks or trade negotiations with the United States. There's a conflict in the Middle East going on right now, which I'm sure is slowing things down really for everybody around the world.
Yep.
But if I had to ask you, what is the biggest hurdle or difficulty in bringing new investment to Ontario? What are countries telling you? What are businesses telling you? What is the number one, I guess, headwind that you're facing, and how can you overcome these headwinds?
Well, the uncertainty of President Trump's tariffs have put a chill on business around the world. It's remarkable when we go from country to country. We were on 30 individual missions last year to 20 different countries. And no matter what country we were in, no matter which companies we visited, I mean, our missions are not big volume of people. It's me and one of the staff, and we have and we meet up with 15 offices around the world. So we would meet up with our senior economic officer, and the three of us would traipse off and meet with a select group of companies that we've already pre-qualified, and we like to come back with sales. So when I say mission, I'm not talking about the whole band behind us, but we hear the same thing in this, and they all tell us in this very tumultuous world of Russia's illegal war in Ukraine, or the war that was in Israel. Now we add, of course, the war in Iran, and China's big mitt that covers our supply chain. A lot of turmoil in the world. They look across the ocean and they see this beacon of light, and that's the province of Ontario. because we're predictable, we're stable, we follow the rule of law. Anybody that knows us knows that when you shake that Premier Ford's hand, you've got yourself a solid deal in a dependable and reliable jurisdiction. And I think that is the problem is the unpredictability in the world and the instability. But the solution is you've got one place in the world that you can rely on, and that's Ontario. That's why we added 750 companies last year.
Yeah, and it's great to know that Premier Ford is, as you say, a businessman, right? Running a business for many years, like yourself. So I'm sure when you shake his hand, it's a deal. And thought we'd move on to I guess I mentioned before we came on air, and a question, an opinion, what I'd like to get from yourself. And we've been talking a lot about taxes on our show,
Yeah,
a lot about tax reform. We had Jack Mintz from the CD Howe Institute on our show talking
I
about
love
tax.
him.
You
We've
love
had
Jack.
breakfast a few times in my career.
Excellent. Yeah, Jack's a great guy, and he came
Yeah.
on our show. But I thought I'd ask you your opinion. And what would your opinion be if I were to tell you that our government, federal government, was thinking about or about to do what Dr. Jack Mintz calls Big Bang tax reform,
Yeah.
cutting taxes for businesses and individuals meaningfully, not just 1%, but meaningfully to stimulate the growth in our country. Would
Yeah.
that make your job easier?
Well, I would say welcome to the club. We've lowered the cost of doing business. In our very first year was 7 billion, then 8 billion, then 9, then 10, then 11. This year it's 12 billion dollars in savings to business through lower taxes, through the workplace safety insurance that we've reduced the premiums by 50% annually without touching the benefits. In fact, we've increased the benefits. So I would say welcome to the party, and don't be afraid. It's going to work. And I would say to them, we've shown you the way to do this. We've shown you that lowering taxes will increase your revenue. Think about this. So when I say we've cut the cost of doing business, this year we take a $12 billion haircut on our revenue. But think about this, what's happened. By lowering costs, the businesses have invested more money. They've hired more people. 1 million people have been hired since we got elected. That's what happens when you lower the taxes. 1 million new jobs because the companies say with this money that we've got back, we're going to invest in our business. All entrepreneurs, I'm a lifelong entrepreneur. That's what you do. Every time you find a dime, you invest 11 cents. That's just the way we are. That's the way we're born. So 1 million new jobs created. Secondly, it's going to sound counterintuitive, but the fact that we take a $12 billion haircut, our revenue when we got elected was $150 billion annually. Today, it's $230 billion. So it's up by 50%. Increase in revenue by taking a haircut every year. So to the feds, I would say, don't worry. This is how you grow your country.
So I guess it sounds like, and talking to a lot of individuals, sounds like a cut in taxes would be welcomed by yourself and by province of Ontario, and I guess it would make things a little bit easier to bring in more business to our country. It sounds like.
Yeah, we followed that. We follow our own rule every year. We've been lowering the cost of doing business. We've never raised a tax. Like Premier Ford has never raised 1 cent of taxes since we've been elected. All we've ever done is lower them. In fact, in this last budget, we lowered the small business corporate tax rate or the corporate income tax by 31.25%. That's a pretty big cut. It's about 3.5 billion in income tax relief over 4 years to a small business. These are the kind of things that we're doing, Allan.
Yeah, and it's great, and you're not alone. Obviously, talking to Dr. Jack Mintz and many others I've had on the show, everybody's kind of on the same page. It'd be great to hear our federal government come around to that way of thinking. And maybe Prime Minister Carney at some point will give that some consideration.
Let me just throw another thought in there. Like I've known, and if you study economics, you know the Laffer curve, and
Yep.
it's of course from Art Laffer. I've had many meetings with Art. We've talked on the telephone, and I told him years ago that when we make government, that we're going to implement his philosophy of lower taxes creates higher wealth for the jurisdiction. And in Ontario, think about this new revenue that we have. When we got elected, we were investing $61 billion a year on healthcare. Today, it's 101 billion. That's what you do with $40 billion in healthcare investment since we got elected. That's what you do with the wealth that you got created because of the lower taxes.
Yeah, absolutely. And we know that if the consumer has more money in their pocket, they're going to spend it. That's what they do, and that drives the economy for sure. Um, the federal government over the last, well, really since the prime minister was elected, we see him often traveling around the world trying to drum up new business, right? Trying to get non-US trade relationships going in Asia and Europe, and really focusing on that. Obviously,
Yeah.
as we know, the trade negotiations are ongoing with the US and Canada. Are we doing the same thing in Ontario? Are we trying to forge new non-US relationships while still obviously trying to keep our US relationships? Is this a focus of ours here in Ontario at this time?
Absolutely, yes. We, as I mentioned, have 15 offices around the world. What we've done is opened a brand new trade and investment office in Singapore because in the ASEAN region, we really didn't have representation. We have two offices in India, we have one in Japan and one in South Korea. But that ASEAN area, Indonesia, Philippines, Manila, Malaysia, that area was void. So we opened an office in Singapore, and we also opened an agent general position in Bangkok, in Thailand. And since 2018, our non-US exports are up 75%. It's because we're out there, we hustle. We love what the feds are doing in terms of their international movements. And it's really interesting. Sometimes they go before us and we're a month after them, making sure that what they said, Ontario gets a big piece of. And other times we've led the way, whether it's in Brazil or Uruguay, Argentina, because they're trying to do a Mercosur or Mercosur, however you like to pronounce it, deal, which is the Latin America deal. We wanted to be there and make sure that these countries in the Mercosur region understand, yes, Canada, but really if it's manufacturing and other related industry, advanced manufacturing or tech, AI, that Ontario is where you need to be. And so we've seen like 241% increase in trade with Ontario and Brazil. In the UAE, 207%. And Korea, almost 100% increase since we got elected. India, when I took my first trip to India as a cabinet minister, I remember reading my briefing and I thought there was a typo. Think about it. At the time, we were doing $400 billion in two-way trade with the US. And I'm reading my briefing for India thinking, what could it be? It's a massive country. 400 million is what we do in India in two-way trade. Now it's up almost 90, it's up 88% since we got elected.
Yeah, no, it's great. And you mentioned AI, tech,
Yeah.
defense. So when you go to these countries, is there any specific, I guess, ideas that you go in with? Meaning, are you looking for certain business in certain sectors? Are there certain sectors you're targeting? You mentioned a few already, but is there anything like, do you go in with already ideas as to what type of business you're looking for?
Yeah, so when we go over, it's usually because we've determined that the country's ready for a ministerial visit, that we're going to try to close somebody, or we have a letter of intent for a company, or we're going to actually finish the letter of intent. We're going to a term sheet now. So when I think of Haschlacker, a company in Austria, we lured them into Ontario and they built $100 million facility. cross-laminated timber. It's the wood buildings that you see, and you have that strong cross-laminated timber. They built a $100 million facility here. 2 years later, we were back at them again to convince them to build a beam plant here. $107 million later, they're building a beam plant, wooden beams. That's the kind of missions that we do. These are to be productive and come back with results. We're in France last year. We came back with a company that's going to be manufacturing tin cans because we don't make tin cans in Ontario, if you could imagine that. $85 million plant. And the list goes on and on and on. Each mission, we could tell you, what we landed from that. So that's generally the tone right now. AI, we would tell them, look, you may not be aware, but Ontario is the birthplace of AI. Dr. Jeffrey Hinton, U of T, he won his Nobel Prize last year for machine learning. You want to be in the hotbed of activity. The Vector Institute, as I look out my window and can see them from here, 800 researchers. We had 17,000 new AI employees in Ontario last year alone. We have 1,700 AI masters enrolled. We graduated 1,400 last year, 1,100 the year before. This is your AI hotbed. So we've landed AstraZeneca's $800 million facility here, Roche Pharmaceuticals. We landed just this week, we announced Sanofi from France. We've met with them many, many times. And we landed their AI center in downtown Toronto just this week, $264 million or $294 million for their AI facility. Unilever, they searched 19 countries and picked downtown Toronto, thanks to Toronto Global, for their first ever AI hub. And that list, I could go on and on with that list. That's the kind of sales pitch. What you're hearing is exactly what I would be saying in the room with those companies. AI, defense, and all our life sciences and our other good things that we do, Allan.
Right. Fantastic. It sounds fantastic. And kind of AI talk is leading me to my last question, which is, an opinion on AI. Obviously, you mentioned we're in Ontario, we're focusing on AI. All we do is hear about artificial intelligence every day, how it's affecting the stock market, what jobs AI, how it's impacting jobs, what type of businesses are affected. As someone who's obviously trying to bring investment to the province and create jobs, what is your comment about AI? We hear all the time that AI might actually be working against you with respect to creating jobs because AI may be taking away jobs from many individuals, especially at the entry level jobs. So what is your comment about AI? As I said, we hear a lot of things, good and not so good, about AI, and we're trying to attract more and more AI jobs to Ontario. What does that mean for us here? What does it mean for our students graduating out of university? What would you say to them?
Well, there are 1,600 AI companies in the province of Ontario alone. We have the second largest tech cluster in all of North America. In 2024, there was $2.6 billion invested in AI, which was almost a 70% increase from the year before. So there's lots of opportunity if you want a job. But here's what I would say. Here's one of the things that would keep me up at night on the AI front. A company that is sitting idle thinking, I don't know, AI, it's not going to really affect me. I'll make this part up. A company that manufactures, you'd see them at an airport. The guy that walks behind the floor cleaning equipment. They'd be walking along, pushing, the motorized floor cleaning with the brush that spins around and cleans these large airport floors, thinking, how is AI ever going to change? Why do I need to know anything about AI? I make these machines. They're always going to need their floors cleaned. I'm good. I don't need to know anything about AI. Two graduates from Waterloo, this part of the story is true. Two kids from Waterloo come out. They see an opportunity. They invent an autonomous floor cleaner. They're in 350 Walmarts today. They're in airports around the world. That's why you need to understand AI. If you're not going to use it, fine, understand it. Learn about it. It's your duty to your employees that you understand the benefits and the pitfalls of AI so that you're prepared. or some kids are going to come out and eat your lunch. So this is what I say to all of the SMEs throughout Ontario. And our government, we have made a pledge. Whenever we are going to use AI, we're going to tell the public about it. We're going to tell them what we're doing and why, how we're using it, what we're doing with it. And then we're also telling them about the risks of AI and the security risks and what we're doing to mitigate those risks. So that's sort of the two sides of that AI coin. But you've got to come right up the middle and use it to your benefit. It's going to improve our productivity and grow your company. That's how you're going to grow.
Yeah, no doubt. AI is definitely it's the two letters that you can't get away from
Yeah.
today and in the future. So
Yep.
I think everybody needs to get on and start learning about AI if they don't already know.
Yep.
Honorable Vic Fideli, Minister of Economic Development, Job Creation and Trade. Thank you so much for coming on our show. It's been a pleasure learning about how our province is growing, how many jobs we are creating, the new opportunities that are coming to our province from, I guess, all over the world. Doing a fantastic job and much success going forward. And thanks again. Hopefully, we'll have you on our show again in a little while to tell us the next latest data and great creation that's coming to our province. So thank you so much
Beautiful.
once again.
Thank you, Allan.
What a fantastic interview from Mr. Fideli talking to us about all the growth, all the jobs, 1,600 AI jobs, talking about Ontario being the AI hub for the country for sure, and one of the biggest AI hubs in the world today. And it's amazing to hear, he was just rattling off all these businesses coming to Ontario, whether they're in the pharma sector. It was interesting to hear a few pharmaceutical companies coming to Ontario, other companies, and all the exciting things, 35 billion in investment to the province. So when you hear someone talking about the province and the country and things are slowing down, they are slowing down from a growth perspective, but Ontario still seems to be moving forward with job creation and bringing business to this province. Now we come to the part of the show that is very popular, where we show three things or talk about three things, and there they are this week that individual investors should be focused on before you make your investment decisions. And here we have three ideas. Upcoming earnings, including NVIDIA, are in the spotlight. We're going to talk about some companies that are going to be reporting earnings over the next couple of weeks and how important they are to the overall markets. What's happening to the breadth of the market? What do we mean by breadth of market? Well, how widespread is the growth? Where is the growth coming from? Is it coming from a narrow focus of stocks like we used to see with the Magnificent Seven? Have things widened out? At one point, a few months back, everybody was talking about stocks other than the Mag 7 were doing very well. Is that still the case today? And our third point, as many of you probably have already seen waking up this morning, President Trump and Xi Jinping, the leader of China, are meeting in Beijing this week, meeting in Beijing later today, this evening over in China. What will they talk about? What headlines will come out of their summit, of their meeting? And that definitely can move markets for sure as well. So let's talk about the first topic that individual investors need to be focusing on, which are corporate earnings. Now, we've already had most of the earnings come out for the first quarter, calendar year quarter of 2026, but there are a couple of notables still left that have not reported as yet. A couple will give us the pulse of the consumer. One, Home Depot. Home Depot will be coming out with earnings on May the 19th. And that, I guess, is in just under a week from now. Obviously, Home Depot will tell us what's going on in the housing market, what's going on in the rental market, are consumers going out and rebuilding or renovating their homes. A pretty good indicator. Home Depot, Lowe's. There's a chart of Home Depot. You could see that it has been struggling over the last little while. Home Depot tends to do well when interest rates are lower. We know interest rates have come down, but I think a name like Home Depot will get even a bigger boost, a larger boost, if the U.S. were to cut interest rates. Kevin Warsh, the head of the Fed, new head of the Fed coming in, he said that he looks to cut rates at some point. Although with inflation as high as it is recently in the U.S. and in Canada as well, for that matter, it'll be very difficult for central banks to cut interest rates with inflation at the levels that it's at. So Home Depot has been struggling down to a new 52-week low. Another name that we have as well that we're going to see earnings from is Walmart. Walmart has been doing a lot better than Home Depot. The Walmart earnings are coming out fairly soon as well. May 21st, I believe, is when Walmart is reporting. And again, it will give us the pulse of the consumer. Not only, not only do people in the lower class or middle class shop at Walmart, there are a lot of upper class individuals. The higher income earners are also shopping at Walmart these days. No longer is Walmart that name you go to pick up, cheap clothing or cheap groceries and things of that nature. Yes, they tend to have cheaper products in the stores versus other stores, but they also are the place that many people, including the higher income earners, are going to pick up a lot of items. And you can see here from the chart, Walmart has done extremely well, a little bit on the expensive side, but has done extremely well over the last, let's call it last few years or so. I also mentioned off the top of this segment that we're going to get financials, banks, big banks reporting. We have our next chart here, shows the iShares S&P TSX Capped Financials Index. You can see how well the banks have done since, I guess, April. They've really shot up after, obviously, the war in the Middle East broke at the beginning of March. Everything's kind of pulled back a little bit, although financials didn't pull back that much, but then has surged in the month of April like the rest of the market has as well. But overall, I would say over the course of the last year, if you take a look at this chart, it definitely goes from bottom left to top right. So it'll be very interesting to see what the banks in Canada, the big banks, the Royals, the TDs, the Scotias, BMO, CIBC, National, etc. It'll be very interesting to see what they have to say. Another stock reporting, as I mentioned, and probably the most important stock out there, the biggest stock in the world, biggest chip maker in the world, biggest tech name in the world today, 5 trillion in market cap, NVIDIA. Our chart on NVIDIA shows that it's been a bumpy ride, and we're going to come back to this later on in the show, but it has been a bumpy ride over the last 10 months or so, but really has surged significantly higher. And we know that Jensen Huang, CEO of NVIDIA, joined the president and Elon Musk on Air Force One on their way to China. And as I said, they just landed a few hours ago. And Jensen Huang, NVIDIA's CEO, was on that trip. What does that mean for NVIDIA? Will they make deals with respect to finally getting their chips to Chinese businesses that need their chips? What a, I guess, what a positive outcome, if that could happen, would be for the stock. We already are seeing the stock price moving higher today on the assumption, or at least the hope, that NVIDIA stock will, or NVIDIA as CEO Jensen Huang will be able to make some deals over in China, that President Trump allows NVIDIA to send chips to China, and that the leaders of China accept those chips. We know President Trump has already said NVIDIA can send some of their most recent chips, but the Chinese government has basically vetoed it and told businesses not to be buying from them. So we'll see what comes out of the summit. And I think our next chart really clearly shows why NVIDIA earnings are so important. They are at the heart and the middle of so much activity in the AI network. There you have it. Look at NVIDIA. Look how many lines go into NVIDIA. ARM, Nokia, CoreWeave, Intel, Nebius, even Microsoft indirectly through Anthropic, xAI, which is Elon Musk's firm, OpenAI, ChatGPT. And then look, I'm taking one step away from that. You have the Oracles, the AMDs, the Broadcoms, all of those companies, all of them focus on NVIDIA, even countries, UK, South Korea, all so important for AI, for growth. And so earnings out of NVIDIA, extremely important. I think earnings out of Home Depot, Walmart, extremely important. And last but definitely not least, living in Canada, are big banks. What are the big banks going to say come earnings season? So a lot to pay attention to there. Our next topic that I think you need to be focused on, or at least understand, is what we call the breadth of market. Is the whole market moving higher? Is half the market moving higher, or only a very small portion of this market that, of course, has a lot of weight in the market? Is it just a very small, narrow piece that is moving higher? And the answer is the breadth of the market, unfortunately, has come in once again, so that there aren't many names that are going higher today, but they represent a very large component of the overall index. So here you have the Mag 7, which was once upon a time the area of stocks, or the grouping of stocks that seem to be pulling the market higher and leaving everything else behind. I will tell you now that maybe the top two, Alphabet and Amazon, are doing a good job. But the others, Apple, okay, Meta and Microsoft, are actually down over the last year. Tesla not doing as well, struggling as a stock. And Nvidia, up until recently, really wasn't moving an awful lot. So which stocks are moving higher? Not the Mag 7 necessarily, although, as I said, Alphabet and Amazon are moving higher. So what names are? Our first chart shows you some of the stocks that are propping up our market. And yes, that is not a typo. SanDisk, memory storage company. They store the information, help store information. Memory is very big. Anybody buying a laptop today? My son just bought one recently, his old laptop he had to get rid of. And he came, Dad, can you believe a laptop, how much laptops cost? I couldn't believe it. And that's all to do with the RAM, the memory that goes into these laptops. Look at SanDisk, 1 year return, 3,418.34%. Unbelievable. Year to date alone, over 500% return. So if you're someone who owns SanDisk, you already made 5 times your money, and we're not even, just barely getting through mid-May. So 4.5 months into the year, and that's the returns you're seeing. Unbelievable. Western Digital, another storage memory, Micron memory, and then Intel and Advanced Micro Devices, they kind of compete with each other. They provide chips for many different things, computers. Intel has been the one company that U.S. government has chosen as the preferred partner to produce chips. We're hearing now that companies like Apple might go to Intel to produce chips versus Taiwan Semi, because Taiwan Semiconductor, the largest producer of chips in the world, they're backlogged. It's tough to get chips from them, whereas Intel, right now anyways, probably has some more room there to produce chips. Let's take a look at a SanDisk chart. Unbelievable chart. That's our next graph there. There you have it. Look how that stock has moved higher. Western Digital, our next chart, almost an identical chart. We can pull that up there. There you go, Western Digital. And then moving to Intel Corp. Look at Intel. I thought we would throw a chart on Intel. Look how steep that curve is to the upside. It's almost a line straight up. And as I said, the market breadth has been very narrowly focused in tech primarily. This earnings season, we expected 13% growth. We're getting closer to maybe 15 to 18% growth. The majority of growth, where is it coming from? It's coming from tech. It's coming from these names, SanDisk, the Microns, the Western Digitals. And I could probably make a little longer of a list of names that it's coming from, but definitely not everything is going higher. Our next chart shows Invesco QQQ. This is basically the NASDAQ chart that we use. Again, similar pattern to the stocks, to the charts we just showed for individual stock names. We have the Mag 7 stock chart, which we'll show next. And the Mag 7, you'll see that it has moved higher as well. There it is, but not as steep. And that's because not all Mag 7 stocks have been performing. As I mentioned, Microsoft's been struggling under the weight of AI disruption, and Microsoft is a software company, right? They do a lot of software. They do a lot of other things, but software is a main focus, or one of their main focuses. And names like Meta are struggling as well. Lastly, I think we would end off this segment here, or this idea that individual investors should be focusing on, and talking about breadth of markets with this one chart. And it shows all the sectors of the market. Just wanted to highlight a few things. If you look at a 3-month number, which is kind of, you have today, 1 month, 3 month, take a look at information technology. Now, who are in the information technology sector? Names like Apple, Microsoft, Nvidia, AMD, Intel. All these names make up infotech. Look at that. In 3 months, almost 18% return in that one sector. You move over to communication services. Who are those companies? The Metas, the Googles, the Netflix of the world, Verizon, names like that. Again, tech-oriented, tech-ish, let's call it names. And you're looking at a sector up just under 10%. Combining those two names, what, 27%, almost what, 28% growth? Unbelievable. And that's what I mean by breadth of market. Unfortunately, we would love to see a lot of other sectors. You're looking at healthcare down almost 7%, consumer staples down almost 3%, financials even down 2%. So it's not growth equally distributed. It's definitely focused on tech and a very narrow focus of tech. So I think you got to be mindful of that. Can't just jump on the tech bandwagon and buy all technology. Got to stay diversified. You want to definitely have names in all different spaces, because when certain things in tech are struggling, like Nvidia was over the last 10 months, we showed you in that chart, flattish for 10 months, and then all of a sudden shoot higher, then that's when you want a nice diversified portfolio. So the third point I wanted investors to focus on over the next couple of weeks, and in particular over the next few days, is the summit in Beijing. We know President Trump has gone over to China to talk about various things. We have our first chart here that shows some of the things that we believe he's going to be talking about. Number one, trade, of course. Fewer advanced discussions on trade prior to the summit. They haven't been really talking about trade recently, but the White House said they will discuss creating a board of trade to keep countries talking on economic issues. I think trade's going to be up front and center. We know tariffs have been placed, tariffs have been removed, etc. What are they going to talk about with respect to trade? Second one, China's ability to buy high-tech chips, a tricky issue. I know the U.S. wants to sell them chips because they don't want them to produce them themselves. They want to have their hand in the cookie jar, so to speak, but yet they don't want to give them the best and the latest creation of chips. I believe that's why Jensen Huang, CEO of NVIDIA, is over there right now. China sees Taiwan as the biggest risk in ties with the U.S. China says Taiwan would be priority for discussion. And this whole China taking over Taiwan, the U.S. obviously going into Venezuela, now in Iran, or at least the Middle East conflict, not in Iran as yet, but if they were to put boots on the ground in Iran, would that mean that China would consider putting boots on the ground in Taiwan or going into Taiwan and taking over that country? So a lot to talk about, I think, on Taiwan and geopolitical issues with respect to Iran. And there, yeah, the U.S. wants to talk to China about putting some pressure on Iran, which is our last point. They believe that because China imports a lot of oil from Iran, that they would have significant influence with Iran, getting Iran to back down, getting Iran perhaps to get rid of or lose their nuclear ambitions, to give up the enriched uranium to the United States that we know is there and that they have not agreed to give up as yet, and hopefully prevent another attack by the U.S. on Iran, and hopefully we can have some peaceful negotiations rather than more aggressive ones going forward. Our next chart shows just how important, obviously, U.S. and China trade is. We have 2025 U.S. trade in goods with China. Look at that chart there. And you can see the balance of trade between exports and imports. You can see pretty much every month of the year last year, the numbers were negative. So why is President Trump so upset and putting tariffs on China? It's because of that negative balance of trade. We go to 2026, our next chart, and we could also see that that negative balance hasn't really stopped, but it's slowed down quite a bit, and that's because of the tariffs, because a lot of goods aren't going back and forth between China and the U.S. Perhaps they will start flowing back and forth a lot more often after this summit. Our last chart in this space is basically the headlines. The headlines that came out or have been coming out over the last little while. NVIDIA says CEO Jensen Huang is joining Trump's China trip. Trump and Xi Jinping, or Xi, enter China summit distracted by Iran war. The main one at the bottom there, investors say they want Trump and Xi to stay out of AI's way. We know that government is getting involved in regulating AI. So the headlines over the next couple of days coming out of China, definitely something to keep an eye on. the breadth of the market. When you make an investment, you want to make sure you stay diversified. Don't put all your eggs in one basket. And upcoming earnings from the likes of Nvidia, so important, and others like Walmart, like Home Depot, and then eventually in the next couple of weeks from now, our major banks, and we'll be talking about that on our next show for sure. So those are the ideas, in my opinion, individual investors need to be focused on before you make your investment decisions. Investing in artificial intelligence. Interesting story to tell about, let's call it a year and a half ago, approximately. I was on a phone call with individual investor. And it was one of those times where the light bulb just comes on. And as you're talking, you're realizing something that perhaps wasn't clear to you before. Happens all the time, I'm sure, to all of you as well. And that was that listening to all these CEOs, as I did that morning, that very morning, and prior to that morning, I said to myself, and I said to this investor, you know what? This could be the big one. And they said, what do you mean? And I said, this could be, if not the biggest, one of the biggest opportunities for individual investors, corporations, or whoever is doing the investing to make a lot of money investing in the latest and greatest that is coming out of tech and AI in particular. And it just hit me. All the CEOs that I saw, and this is all, there wasn't one that said different, said that they were this is back about a year and a half, 2 years ago, they were on the cusp of something tremendous, something they had never seen before, and something that they all predicted would be massive in scale. The Industrial Revolution, they compared it to, right? And they have not been wrong. And I said to the investor at that time, I said, this is the chance for investors to buy into technology and to reap the rewards of what is about to happen. And all of you that are watching, I'm sure all of you would agree, the more tech you've owned over the last couple of years, the higher the returns. Now, yes, that is true, but I'm not here to say that you should throw away all your other investments and just buy tech stocks. That doesn't work either, because there have been, even within the last 3 years, where we've seen markets go higher, we've also seen lulls where tech stocks have been sold off for various reasons, geopolitical, whatever. And as we know, all stocks have their day. Not everything runs to the moon. Not everything goes higher forever. We always see a point in time where things level off, come down, and perhaps, hopefully, go back higher again. So to me, I think the message is very clear. Technology is here. The growth is coming from tech. AI is just going to be used more and more and more. On a previous show, we showed how much businesses, how many functions per day businesses were using AI for. Started off one function, now two is becoming more popular. Pretty soon it'll be 3, 4, etc. And I think this is quite important. And I think this is where the world is going. But again, you got to be careful and you have to be smart about these types of situations and this type of environment. First chart that we have here talks about the wider tech sector led the S&P to another double-digit gain. Look at information technology. I told you what information technology was, the Apples, the Microsofts, NVIDIAs, AMDs. Look how much of the gains last year came from infotech, 45%. Communication services, 18%. You add the two together, almost 2/3 of the gains of the S&P 500 just came from those two stocks alone. Unbelievable. Let's go to our next chart. Global X Artificial Intelligence and Technology. This is just an ETF that tracks artificial intelligence. Look how well things have gone since April. And for those that, as I said, own some tech in their portfolios, whether it's an NVIDIA, whether it's a SanDisk, a Micron, whether it's a Taiwan Semiconductor that makes the chips, biggest chip maker in the world. NVIDIA creates them. Taiwan actually makes them. Taiwan Semi makes them. Look how well this has done. We have another chart here that kind of goes into detail and explains a little bit. It says AI stocks expanding dominance in equity markets. AI-linked stocks now account for a record 45% of the S&P 500's total market cap, according to data. TSMC, which has a market cap of around 58 trillion Taiwan dollars, or about just under 2 trillion US dollars, now accounts for more than 40% of the Taiwan's benchmark TAIEX index. Samsung Electronics and SK Hynix together made up a record 42.2% of the Kospi South Korean Stock Exchange. That's according to Manulife Investment Management. And we know that the Kospi has now surpassed Canada as the seventh largest stock market in the world today. And the main drivers have been Samsung chips, SK Hynix chips, memory in particular. Both of those companies, massive companies today. Our next chart we have of the NASDAQ, a 5-year chart of the NASDAQ. And you're going to see, right? We have the ups and downs. Last spring in April 2025, President Trump announces tariffs, tech stocks go down. What happens? People buy the dip, goes right back up. What happens this March? War in the Middle East breaks out, tech stocks go down. What happens? Investors buy the dip, stock market goes right back up again. So it is unbelievable how much tech has, I guess, filtered into everything that we do and stock market returns. Next chart we show is NVIDIA. It's a longer term chart of NVIDIA, 5-year chart. Look where NVIDIA traded back in 2023. Unbelievable. Look how far it's come in just, what, 3.5 years or so? It's just unbelievable how it has done. But I wanted to show this, as I mentioned, every company has its day, and NVIDIA had its day as well. Let's take a look at a 1-year chart from NVIDIA. And you can see, as I said earlier in the show, look where NVIDIA has traded. Look at that narrowed focused channel. NVIDIA basically went nowhere for the last 10 months until April. From about, let's say July to April, it really didn't do anything. So if you were an investor that said, you know what, I'm never selling NVIDIA stock, it is a keeper. And I've heard that from a few investors. You actually wouldn't have made any money over the last 10 months until April. And now April, it's going back up again. I heard a similar thing from those few years back that used to own Apple stock. Oh, we cannot sell Apple. Apple is the best company in the world. Well, as we know now, Apple has struggled a lot. It's up lately, but it struggled a lot for quite some time, as we know that their stock, was trading at around 30 times earnings with a 7% growth rate. So a mid-single digits growth rate with an earnings multiple of 30 times. That's just way too cheap. They're not growing earnings fast enough to have a high multiple. So the stock was looked at as expensive. Another stock chart we have is one for Meta. Meta will also show you that, yes, another, I guess, Mag 7 stock struggling right now. And if you were someone who thought Meta was going to the moon, well, again, you got to be careful. Trim your profits when you have them. Trim some of those profits back. Move that money into other areas that haven't seen growth yet. Perhaps you trim some you trim some Micron and you buy Meta. Perhaps if you own SanDisk, you take some off the table and you buy some Microsoft, because those are the names that haven't gone up as yet. And I'm confident that they might very well go up in the coming quarters that are in front of us. Another chart, AMD. AMD basically didn't do an awful lot. If you owned AMD for quite a while there, you actually maybe were down in 2025, and then boom, in 2026, what a run higher. Unbelievable run to the upside. And we will actually now show you the S&P index, 7,400 at all-time highs. It's been hovering around 7,400 for the last few days. You can see there the peaks and valleys. And our last chart, last but not least, I wanted to show this chart. This is a chart of Caterpillar. This goes to show you why you need to be diversified. Caterpillar, a stock that many people have owned for many years, an industrial name, sells heavy machinery. You see all their tractors and bulldozers and everything like that. Look at their chart. Has gone from the bottom left, starting, I would say, July or summer of last year, straight up. Yes, they've benefited from data center and AI build out, helping to build these data centers, but also from an energy perspective. They do generators. They sell generators that are needed for energy, for backup energy for these data centers. So staying diversified means a lot. It means that when things are struggling on some of the big names you have in the portfolio, other names can pick up the slack. And when you get too far ahead, trim back your winners. Buy names like Caterpillar a few years ago. Good quality names always rise to the top, but they don't always rise to the top together. And you got to stay diversified, even in this time where we see a lot of the concentration on tech stocks. So my conversation a few years ago definitely came to fruition. The question is, how long will this run last? I don't think anybody knows that answer, but if you talk to people, they'll still tell you that we're maybe in the early to mid innings of this AI bull run. thought I would do a little quick piece on corporate buybacks. What does that mean? Well, that means, as I said off top of the show, businesses buying back their own stock. Businesses are always looking to invest money, invest in capital, invest in equipment, I should say, invest in their own business, try and expand, trying to do whatever they need to do to make money. Well, a lot of businesses, what they tend to do is when they see their share price down and down for not good reasons, well, they say, what's the best investment right now? Buying back our own stock. Our first and only chart for this segment shows all the companies that are looking or have purchased a lot of their own stock. And as I said, when you buy your own stock, you give your stock price a boost because you're pulling shares out of the market. And as we know, the more shares available out there, the more the share price is diluted. So if you buy back your own stock, bring it in, you're removing shares from the market and therefore propping up the value of the shares. Biggest buyback, obviously, Apple, $100 billion buyback. Salesforce, a name that is struggling. What the CEO, Mark Benioff, did is said, you know what? Our stock price is down. It should not be. AI disruption is not going to hurt Salesforce. Their earnings were good this past quarter. We're going to buy back our own stock for $50 billion. And not only buy back their own stock, they're actually borrowing money to buy back their own stock. A bit of a risky thing, but that's what they decided to do. That's how confident the CEO is in his own company. You see Walmart, Verizon, Adobe, Netflix, all the different companies towards the bottom, Pepsi, Dell, Broadcom, whole list of companies buying back their own shares. And when you do that, that gives confidence to the general market that your company is doing well. If you're going to buy back your own shares, if you're going to increase your dividend, if you're going to have the CEO and people that are high up in your business buy shares, they announce that insider trading, that these individuals are buying their own stock. This gives confidence to the market and tends to prop up the value of these shares. So whenever you hear about corporate buybacks, think of that as a positive that continues to work for these businesses. Hybrid car sales are definitely on the rise. And, car sales have jumped 37% in the past 2 months, according to the data that we've been seeing. We haven't seen as much of an increase in EV sales, although in Europe, they tend to focus more on EVs, pure EVs, electric vehicles versus hybrids. And I think it's an affordability thing, right? I think EVs are a lot more expensive than hybrids, and oil prices are high right now. Filling up your regular combustible engine is a lot more expensive. And so people are trying to find alternatives. But in my opinion, oil prices haven't been, or at least gasoline prices haven't been longer for enough time, higher for enough time that individuals would consider, trading in their regular combustible engine car for an EV or a hybrid. I think most people are still trying to wait it out, hoping that what's going on in the Middle East will resolve itself and we will see energy prices come down very quickly. So we have a quote here. U.S. hybrid car sales soar along with gas prices. U.S. hybrid sales rose 37% in the 2 months since the Middle East conflict began at the end of February, according to data research from Motor Intelligence. But fully electric cars have not attracted the same level of consumer interest, even as U.S. gasoline prices top $4 a gallon in the U.S., hitting a 4-year high in late April, according to the data from American Automobile Association. Analysts and dealers point to several reasons why hybrids have become the go-to option for U.S. shoppers seeking a green vehicle. Hybrids are generally less expensive than EVs, and there are more models to choose from. Also, owners do not have to learn a new technology that requires them to change their daily routine, like plugging in a vehicle at night. So I think, yes, gasoline prices are higher. It is pushing people towards alternatives, but I still don't believe it is making people move totally to EVs as yet. Yes, the first step to go that route would be hybrids, and we're starting to see that. So the longer oil prices remain elevated, the more gasoline prices remain elevated, the more we are going to possibly see alternative vehicles on the road, more hybrids and more electric vehicles. And I think that is a good thing, right? Good thing for the environment. But, I guess all of us wish that it was happening for other reasons, not the reasons that they're happening for today. Quick hits, 3 things that I've seen in the news over the last couple of weeks that I wanted to talk about on our show today. Carney signals openness to deeper trade ties with U.S. and Mexico. This came out of Bloomberg. We know the prime minister has been forging other relationships around the world, but it's great to hear that he's definitely open to deeper ties with obviously two major trading partners and the biggest trading partner of the United States. Three central banks just sent Tiff Macklem a message. What message did they send them? Well, they're raising rates, which is interesting. Tiff Macklem, head of the Bank of Canada. What is he going to say with respect to these countries around the world, in Europe, Australia, raising rates? Older Americans say it's a good time to find a job, but younger people aren't buying it, new poll finds. We're seeing a lot of young individuals coming out of university and college, having a trouble getting jobs. Even summer jobs are hard to come by as well. So let's go to our first quick hit. It is a quote we have here from Prime Minister Carney. He says, like Mexico, Canada remains open to deeper integration, including options for Fortress North America. We've heard Premier Ford talk about Fortress America and Canada. Can-Am Fortress, I think he calls it, in selected sectors. To be clear, those offers are on the table. So Prime Minister telling everybody he wants to make a deal. He wants Canada to be there with the United States and Mexico, and he wants the deal to be strong. Our next point or quick hit that I came across is this idea of central banks around the world thinking about raising interest rates, actually raising interest rates. I think Bank of Canada hopefully is a long way off from doing that. I think the Federal Reserve will not consider raising rates. Hopefully we can see inflation becoming under control or getting under control. We have a couple of banks, our next chart, three central banks sent Tiff Macklem a message. There is a Bank of Australia, hiked 25 basis points. Norway, hiked 25 basis points. New Zealand on hold, but they are debating right now. They're taking on a bit of a hawkish stance. So, Canada looks at places like Australia, especially Norway, New Zealand. They're sort of related to us, right? And, they look at, Tiff Macklem will look at what these countries are doing, England and others, as to how they're handling the inflation situation. And we'll see what Tiff Macklem does. Hopefully, if he's watching our show today, please do not raise interest rates. Don't think our country is in a state to be able to handle that. That is my opinion. In fact, I think we should be doing the opposite. I think we should be cutting interest rates, cutting taxes to stimulate growth in our economy. Third quick hit, which is all about older Americans versus younger Americans and where the jobs are. We know older Americans think things are going great, that they're seeing jobs. Our last two readings out of the United States showed a lot of job growth, unexpected job growth, strong jobs growth. So maybe U.S. has turned a corner. We haven't. We saw job loss this last jobs number. But our one and only chart here, fewer young Americans say it's a good time to job hunt. You can see the turquoise blue line. That is your age group 15 to 34. 43% think it's a great time. Whereas the line on top, which is 55 plus, they're saying 64% of them think it's a great time to find a job. So what are individual businesses going for right now? They don't need as many people. They're not hiring as much. They're not firing. They're just not hiring. But if they do go for jobs or job hirings, what they're doing is they're going for people that have the experience. So clearly we can see a big difference between the young and the older when it comes to jobs and job availability. And, that's unfortunately not changing over the last little while. And hopefully we will see some expansion, and hopefully some of our younger generation will be able to find jobs in the coming future. What's my take? Part of the show where I take one question from our audience, and I know our show has gone a little longer than usual today. We had a great interview with Vic Fideli. So we'll just take one quick one here. There's a bunch that came through. Let's see. With the market moving as fast as it is, how often should investors be rebalancing their portfolios? Is it better to stick to a strict calendar schedule, or should we be making moves based on how the news flows? And I guess my answer to this is there's really no set time. When I look at portfolios, I have a schedule to make sure everyone gets looked at in a certain period of time. But with respect to looking at portfolios, your own portfolio, I think it's more of a comfort thing. I look at portfolios on a regular basis here, the Allan Small Financial Group. we're always trying to stay on top of things, keep your finger on the pulse of the markets. If something should pop up, yes, you should look at your portfolio more often. If things are remaining status quo, things are doing well, then you don't have to get down and look at your portfolio as often. Although, as we said earlier, you probably want at some point trim some of the profits, add some new names. And that's what I do quite often here when I look at portfolios. So how often should you look at your portfolio? Well, I think it's dependent on the investor themselves. Some look at it every month, some look at it every quarter, once a year, etc. I think it's more of a comfort thing, but definitely at the Allan Small Financial Group, we look at portfolios on a regular basis. Every few months, we look at everyone's portfolio or sooner if something should arise. So with that, I want to say thank you to everyone who tuned into our show. As always, I hope that all of you took away something from our show, a piece of information, a stat. There were a lot of statistics thrown at you during the Vic Fideli interview, during our show, a lot of information coming at you fast and furious. We're seeing a lot of geopolitics right now with President Trump over in China. The geopolitics could and very well might affect markets. So a lot of things going on. So hopefully all of you took at least one thing out of the show today. So we will be back, as always, 2 weeks from today, Wednesday, May the 27th at the same time, 12 p.m. across all social media platforms. And once again, as I always say, happy investing.